1 2 1 2 testing 1 2. We've got the microphone, we've got Sure.
Waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high, watching the candles, reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge. Finding that edge, keeping the balance, no distractions. Phone on silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
That is forming, like it's cold. Balance they slow down, steady strong through it all. Risk defined, profit inside. Seacrest Markets guiding every step into the light. Seacrest Markets leading the way. Making a move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Let's talk execution, let's talk speed. The crystal clarity is what we need. Some is action, just the prices I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Secrets is the vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promises keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no chains. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Plan is forming, markets call. Balance based drawdown, standing strong through it all. Seacrest Markets leading the way. Making a move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Leading the trends and the volume orders. Chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. 55 or match trader speed. Technology serving the traders' need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. With a new era, the elite of the screen, navigating depths where the giants are seen. Seacrest the name, the gold standard inside, turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision.
Welcome everybody, Seacrest Markets live, Thursday the 25th, I believe. Yeah, 25th of February, 2026. Apologies. Oh, no, it's Wednesday, isn't it? It's Wednesday the 25th. My apologies. The reason I'm thinking Thursday, family birthday tomorrow. So, first of all, let me start by saying my deepest and utmost apologies and sincere condolences for yesterday. Some form of technical issues across the streaming platform we use and maybe some sort of glitch with my ISP. Not entirely sure. However, following that, reached out to the stream system company, highlighted potential areas of concern, and I also went out and purchased an additional satellite just to try and strengthen my internet even more. Now, I run at about 900 meg download and about 150 upload. So we can only hope that a new satellite will maybe ease out that, and we can, of course, shift the concentration of blame elsewhere. So I apologize sincerely for yesterday. I won't dwell on it. It was quite an interesting day yesterday. We got quite a bit done, in my opinion. I know that we spoke about the S&P trading into that area of supply or resistance, which we will cover momentarily, because if you actually look at where the market traded post our live stream, it did what we said it would do. So a good start to overall market breakdowns, overall market analysis. And I think what we're seeing at the moment is almost like a bit of Fast and the Furious, for those of you that are old enough to remember the very well-known series of racing and drifting. So it's kind of high octane is where I'm going with it, right? We've got high octane transition. We're moving from geopolitical shocks, tariff shocks, towards almost AI judgment day. So Nvidia, which we touched upon briefly yesterday, the world's most valuable company, prepares to report earnings. We still have the fragility in the recovery from a narrative perspective. We're seeing risk assets trying to recover following that Supreme Court's move to strike down on previous tariffs, only, as I discussed yesterday, for that relief to be met by President Trump's immediate pivot to that 15% global uniform levy. Now, in terms of where the overall markets are looking, obviously we can see markets everywhere on my screen. Overall indices are all green, which is good. Doesn't necessarily mean that all constituents and stocks inside it will be. You can see at the bottom part of my screen, Alphabet is trading down just offside, about spot 2%. Everything else has somewhat started to try and recover. A lot of people were buying those dips. Look at Tesla. Now it was up 2.4% yesterday after its fall, which we discussed the day before. Microsoft, Amazon, Apple, again, all of the market was completely red. It was an absolute bloodbath. However, we did see some recovery, and I hope, not advice, but I hope you did go out and look at the markets for your longer term portfolio and say, maybe I like this basket, maybe I like this ETF, I'm going to add. From a macro perspective and a geopolitical perspective, we'll just briefly touch on that. We still have the trade policy discussions. We still have the Iran tensions, and we still have that data vacuum that we were discussing yesterday. So if I was to really quickly cover, I'll start with Iran. Now, with Iran, the oil prices in particular are still hovering around those 7-month highs. It's trading at around $72 a barrel, I believe. Doesn't really want to show me on here. That's fine. That is a shame. Maybe it's in the future section. Here it is. So obviously crude oil futures is actually 66. Brent crude is 71. I mean, with it still trading around that kind of $71, $72, we've got negotiations going on in Geneva with that 15-day ultimatum weighing heavily on sentiment. Obviously, what are markets going to be looking for, and what are investors going to be looking for? Because that's the key. We don't care necessarily where price is. We care about how do we, one, identify probable opportunities for us to get involved, and two, how do we identify any signs of a breakdown in talks, which could potentially trigger a massive safe haven flight, i.e. moves into gold, move into the USD. One second, sorry. So, key will be, will there be any breakdowns in discussions, or will there be any positive developments over the next 15 days based on the ultimatum? Moving out into, we were calling trade policy, section 122, which is obviously ongoing at the moment. We did see that mean reversion day come in yesterday. Obviously, people started buying back up that previous day's dip, because even though investors did realize that the Supreme Court had blocked that tariff pathway from a legal perspective, if the 15% blanket tariff comes into play immediately, it will stick for at least 150 days. So we're going to see inflationary tax, premiums going to start moving into the global bond markets. And again, I just think it pushes more uncertainty into the markets. I think from a long-term perspective, we can continue looking at it and saying, right, do we expect X company to increase their revenues over the next 1/2 quarters? If we believe that will be the case and underlying micros and fundamentals won't shift, we are obviously better positioned to buy into such stocks. Is everyone following me today as well? Like, can you hear me on the stream? Can you see my screen? Is the connection all good? Are we happy so far? If you can hear me, just please drop a little thumbs up or a yes in the comment box, just so that I can actually know that you're following me and we're not having to start all over again. Okay, super. So yesterday during the live stream, albeit a short one, we were discussing the rejections from these key areas. So it was about night between these two candles here on the hourly time frame. So let me just zoom. Let me love heart it, because our analysis is bang on. Let me love heart it. So we were talking about how the expectation for price was to trade away from this into this area. Now, of course, there's two areas we were looking at. We had the extreme of supply, which was this, or formed of this level here to the left, which was trading in and around that 68.90 to 6900 level. And we also had that huge red box that we drew on the screen, which is almost acting like a pivotal area of resistance and supply from historically formed price action. So if we look, we can go all the way out to the daily, and we can just see, it might even be a bit clearer on the 4. Let's go 4 hour, it'll be a bit clearer. So coming out into the 4 hour, you can just see that previous resistance became support, came resistance, and it also creates that range bound price action. So very rangy in and around these levels. So the theory was that price would navigate back towards that And as you can see, if I jump down into the M15 very quickly, we had this. I'll just change it to white quickly, and I'll make it a little bit bigger for you all. We had this, I say forecast, but it wasn't. It was a forecasted line to show you the expectation for price to trade higher. Now, that was good. We had that price traded into that late yesterday afternoon. So UK GMT, 4:15. We were pretty much in and around that area. We had that resistance holding, and we slowly corrected to the upside throughout the rest of the US session and throughout Asia before rounding off as we trade into mid-morning of Asia. So again, analytically, we've done a superb job there, team. So well done, traders and gentlemen, for actually obviously being part of that live stream. If you watch the recording and managed to get a hold of that, then congratulations also. Now, how do we take advantage of that? So I don't know whether there was any trades inside yesterday's longs. Reason being, extremely busy on the back office and back end of this market. So it does make it quite difficult for me to be fully active and trade at all times. So a couple of scenarios. We don't get long, and I think people need to understand this. We don't get long when it comes into our level. We get long when markets confirm momentum is in the direction that we wish to trade in, that is the least restrictive. I think that's the best terminology without going too complex for you. So when we look at the way this market was trading, we had this level here. We would have expected to see this level hold. This level failed, okay? So we couldn't get long. Market traded lower than this. So we now are in a position that we were bullish unconfirmed. We're now bearish unconfirmed, but we're ranging. Okay, so essentially we're ranging, we're confused, we're not doing anything, sit on our hands, let the market play out. Because what we would be looking for is, if supply was going to take control, first of all, we want to see ideally the low go on this level, right? Realistically, after this low went, we would want to see this high go, and then we'd want to see this low actually go with a candle, not a wick. And then from there, we'd be looking at getting short in and aside, in and around this area. Now, markets didn't do two things. Markets didn't close below that level. We closed with a wick, so we had a fake break to the downside, also known as some liquidity sweep or a sweep of liquidity, however you want to term it, right? Then we also have, as we were coming into this level, let me just clear this up a little bit. As we were coming into that level, obviously some form of news came out. We pushed it to the upside. Now, bearing in mind, there wasn't really any high impact news forecasted on trading economics. We wouldn't have wanted to jump in front of that steam train. We wouldn't have wanted to get short, right? Because one, we was unconfirmed bearish anyway. Two, we needed this level to hold for us to actually consider getting short and trading away from it. Three, we had a sweep or a fake break to the downside. So why would we be getting long when price is potentially showing us that it wants to go higher? So as price came into that level, there is no way, unless you had a limit order set inside that market or some form of order positioned in the market, would you want to get short that trade. You wouldn't want to be hitting market at that. Likelihood is you would have been slipped on that before you got filled, and you would have had a worse position. And realistically, you would have been stopped out on that very same 5-minute candle. So then what happened is, again, you're not getting short because why? Levels didn't hold, confirmations didn't come into play, and you don't get short at this level. I've said this time and time again. You don't get short, in my opinion, at the level. You get short from the level. Now, what I mean by from the level is you wait for something. It could be, it could be a trend line break. It could be a moving average. It could be volume confirmations. You could get volume confirmations from inside here. You could be looking at your book map and try to understand where the CME data is showing you on potential liquidity, where the resting orders are, where the active orders are coming in. You can kind of piece it all together using that. We try to get short away from the level. So you would never want to be getting short in. You want to be getting short away from. So something in that front leg. It didn't happen, so you don't get short. Level got traded through. We're now coming in and saying, oh, okay. So we're now shifting to being bullish with demand in control. Now, again, entirely up to you. We're trading inside demand, higher time frame. We're trading from an extreme of a range with bullish momentum. Yes, the market hasn't officially confirmed that we're long on this current price action. We could potentially conform and look to the left and say, okay, demand has previously been respected 1, 2, 3 times. We've now swept all of those lows here. I'll just draw it in red so you can see it. We've swept all of those. We've had a fake break to the downside, and demand is now holding. With the shift of momentum, we could look to get long. I'm not saying you would. You could look to get long, and you'd look to get long, maybe have your stop below that sweep. I don't care where you have your stop. It's not for me to tell you where to have your stop. Maximum R available, you know, had you have done your fixed 1 to 1R, that would have been around here. 1.5, again, you're not at 1.5. You'd still be in this trade. You're still holding it if that's the case. Alternatively, if you didn't want to get long in this area, you'd be waiting for something a little bit later down the line. So, okay, so let's move on to price. So we've got this push up. We have this significant push up. We have this. We then have a break. We have this. So we could look to get long inside this leg. So just show you this. So we could look to get long somewhere inside here. High is holding, low is holding, high has failed, low is holding, momentum kicking on. So we're showing that we want price to trade in the overall direction that it entered the range. Okay, so it entered the range bullish. The lows are holding, the highs are failing, the lows holding. We can look at momentum now to see and identify whether we could actually get in. Now, similar scenario, how do you get in? Wait for your confluences based on your own edge. You'd then be looking to trade in line with momentum. You get your 1R pretty much in the next 45 minutes. 1.5R. You get also, again, probably within your next hour and a half, roughly. And then, of course, up to you whether you're running a trailing stop or a trailing TP on that throughout the rest of the US session. Subjectively, of course, with us at Seacrest Markets, you can hold the position overnight. You just obviously have to factor in your rollovers and your swap charges. If you're trading on a prop firm with a CFD prop firm, just be mindful of their rules. And if you're trading on a futures platform, just be sure to close out any positions based on their rules before the Central Eastern time that they set for you within their FAQs. Don't get caught in a position and lose your account or have a soft breach over something so silly. Know the rules, play the game, take the P&L and walk. Could we have got in again? Good morning, Anthony. Would we have wanted to get in again? Maybe, maybe not. It's very high in the leg. You might want to see it base. You've had one potential entry. You've had a second scale in. We're now reacting from supply. We're also trading into that big red level box that we talk about. It's a non-technical term. We call it the big red level box just because that's how we drew it on for you in this live stream on Monday, I believe. Maybe Friday, but I can't remember. Now, in terms of where the market is, we've had obviously the high taken here. We've then had the low taken. Supply on the lower time frame obviously has been respected. We could look to get short from here, but why would you want to get short when realistically it's only lower time frame? You haven't seen a higher time frame or a mid time frame shift. You've only seen the lower time frame shift. Equally, you could have got short maybe in this level. You would have been taken out for maybe a break even or a loss. Again, and this is why you don't trade from the lower time frame. You trade from the mid to higher time frames. You know, when you look at the mid to higher time frames, because we're now trading back in that area, when we're trading in demand from the lows, that fact is we are bullish overall, we're looking for longs. It is an indice as well, after all. When it comes into supply, you don't immediately shift that bias short. You look at it, you try to identify it. Do we start to get breakdowns? Was there a breakdown on the M15 short? Not really. You know, you had that initial move, which was this. We had that break, retest, respect. Did we get it further? No, we didn't. We got to move into it. This candle. So we failed. So we wouldn't even be interested in looking at shorts. So we don't even need to talk about the shorts. 15-minute is still bullish. We had a bullish market, range-bound reactions from supply. We just continue to either hold, sit on our hands, or wait. That's it. They're the 2 to 3 ideas that we look at. Coming into today's market, looking at the 60-minute, still bullish. Can't shift short at the moment. We're bullish, but we're inside supply. That's the 2 points. We're bullish, but we're inside supply. We wait for market to highlight, show its hands, reveal its cards, and then we'll play. We're not interested in playing when the market isn't clear. And the market isn't clear at the moment. Realistically, the way the price looks is we want higher prices. So if we get breaks to the upside, you know, we've got this, we get this correction, we then get this, we could start looking for longs. Equally, if the right side of price, like this, if the right side of price starts to develop like this, we can get short, but price needs to develop to the right-hand side. We need price to develop to the right-hand side for us to actually identify whether the market is shifting back to shorts. At the moment, we can't shift the shorts. So we have to either do the 2 things I've mentioned, remain long or stay sitting on our hands and be patient. That's it. Does anyone have any questions about the S&P, the US 500, or can we move on to gold or the DXY? I'll move on to gold, then I'll move on to the DXY. Good thing is we've got further in this session than we did all day yesterday. So let's talk gold. Oh, again, we haven't really touched any of these charts. So Monday we were more than likely, I can't remember, but Monday we were more than likely discussing the reaction of price to the extreme supply, which is the high, and the range bound effect that we're looking at. And the reason we discussed the range bound effect more likely than not was we're trading from that significant point of demand that we originally said we want to get long from, or that we will be looking for longs from. This high hasn't been confirmed as structurally strong at this moment. It is just the high. We haven't confirmed it to be strong. So there's 2 probable scenarios, right? It's a market. We can't just look at one theory. The first theory is price will just trade through this and we'll trade up above 5,800 into 6,000. That's the first theory. So we just continue to stay long. The second theory is that this supply is respected. We develop right-hand side price action that suggests that this supply is going to hold. Thus, we could start looking for shorts Inside that comment, we also need to bear in mind that we could be trading into a range-bound market. And the reason I say that is the lows are holding. One, if the supply resistance is holding as well, which is 2, that potentially suggests that we're moving into a range-bound market. Now, I've got this forecasted trend line here, but let's just say that we were moving into a range-bound market and adjust this. This is how it would look. We would have higher lows. We would have lower highs. We've got a lower high here based on the current high. Current high is here, the current lower high here, but we haven't, that lower high is not yet confirmed. In terms of a range-bound market, we can confirm it, but the lower high only is defined once the low breaks. Once the low breaks from the previous structure to the left, that is now definitively a lower high. So at the moment in time, it doesn't look like we've done much in price. Obviously, yesterday we didn't get to discuss it. So if we break it down and go into the 4-hour, we'll just look at what's going on in a little bit more intricate detail. Very corrective. We've tried to close. So at the moment, I'm just quite happy to say we're sitting in a 4-hour range. Let's go down into the 60 minutes, see what we've got. Oh, sorry. I hate when you can't move your charts down without expanding the axes. So we're still bullish at the moment. We're still bullish. This is a bullish range. And the reason I say that is the following. This low hasn't really failed. This was the last high to go here. So we're still bullish in a range, okay? Again, suggests further uncertainty in the market. We had a lot of buyers trading out of these levels all the way up. We're now trading into supply. We haven't had a confirmed break to the downside, but both demand and supply are somewhat respectively holding. Again, similar situation to the higher time frames, right? Look how we're trading in between demand and how we're trading in between supply. At this moment, we're ranging. So the high is weak, the low is strong, but because we're not making higher highs in new price action, inherently a lot of these lows become weak. But a consideration is we've had this fake break, a fake breakout to the downside. Traditionally, you want to be trading away from the fake breaks or the sweep, however you can form it. We then have a push up. Why is supply holding if demand's in control? We then get that push up to the upside. Depending on how price comes back in to this area, which is again at the extreme of that previous range demand, we could look for longs in and around 51.40s. The exact price is going to be subjective and it's going to be tentative, right? 51.40s. We could look for shorts from 52s, 52 1/5, so 52.16s, 52.15s. Whether we trade it into 51.50s or whether we hold it through 51.50s because we believe we're losing the reason to be long safe havens because geopolitical tensions have softened, the Iran ultimatum has surpassed, the tariff embargoes and deals have kind of been pushed to the wayside. We could get long. We could stay long. We could stay long stocks is what I meant to say. We could get short gold or stay short gold. So I'm not comfortable of being long or short at this moment in time in and around 51.80s. I'd like to see price action develop to the right-hand side, whether that be shorts from 5,200 or whether that be waiting to get long down at 51.40s, 51.50s. Entirely waiting for price to give me that hand. I do at this moment in time, even though we're seeing uncertainty in the markets, I do still believe we're going to be optimistic. And I would much, I'm not going to be, you have to be a brave man to be shorting gold at highs, but I would much rather be short gold and long stocks than I would short stocks and long gold at this moment in time. It doesn't mean I am. I'm long stocks regardless, but it doesn't mean I'm necessarily going to be short, or I am short gold right at this moment in time. I'm not short gold at this moment in time. I know some people are. However, I would much rather be long stocks and short gold at this moment in time. So that's pretty much my take on it. Again, we're trading inside a range, so nothing much is happening for me at the moment. We're not at any extreme, so I can't say let's get short, let's get long, or say I would be getting this or I would be doing that. I'd need to see price action develop up into the 52.20 area, which is obviously a little bit clearer from here. So 52.16s is what I originally said. 52.16s and 51.50s is pretty much where I'm looking at for now. So let's take a look at the DXY. Again, any questions on the gold, on metals, just let me know. I can cover it again. All right, so again, dollar index has not done much. So it means euro dollar's not done much. On Sunday, we had the demand. On Tuesday and Monday, wait 1 sec. Yeah, so at the end of Monday's session, we discussed the supply. Or we discussed the supply in Monday's session, and as you can see at 10 a.m. or within that 10 a.m. candle, that was being respected, and we're still trading in supply, so nothing has been done. You know, we are bullish, but on the 4-hour, you can see that we broke below that point of demand there, which was the last structural piece that took out this high. We then came in and respected that supply, but we're also seeing demand hold. So even though we've had this demand fail, we've got demand in this leg holding. So we haven't, again, no clear indication what the market wants to do. What I would have liked to have seen is after this level breaks, this level respected, and then we get another failure. Then I'd look for shorts. But what don't we get? We don't get it. We get this. We get this. We then get this. Now, the potential question on my mind is this high now weak? Because all we've done is we've come in, we've reacted, and we've failed to push down. So this suggests to me that the DXY wants higher. I'm not saying we're going to get that. Markets work in weird and wonderful ways. We could drop off throughout the Wednesday's trading session. We could trade down into negative ATR 50s. We could actually close below negative ATR 75s, which would start to push us down into that 97 spot 35 level. And if we get down into 97 spot 35, that is then potentially that new confirmed low that we were talking about, subject to the candle close being below that price. So markets, again, haven't done much because it looks like we're waiting for what's going on. The tariff lag, the Iran lag. There's too much uncertainty going on in the world at the moment for us to be extremely definitive in our ideas, be that bullish, be that bearish. I mean, you look back to the end of January and the beginning of February, we had some exceptional moves in the market. The longs in gold, the shorts in gold. Even through Q4 of 2025, the longs all the way through. Lots of prop firms got hurt on that. Even the biggest, the top 3 prop firms I was speaking to, you know, their books were hurt. Their books were damaged. Gold was really hurting them. But again, coming back into the first Q1 and months of this year, indices trading off from their highs, switching to the longs. And then obviously that 2-3 Fridays ago, the gold crash and the silver crash. You know, we've had a very, very eventful year. It wouldn't surprise me if for some time now, due to the uncertainty, that the markets just keep ranging out. We get a small trend, we range out. Again, 70% range, 30% trend. Not statistically exact, but that's the best way to discuss it. So from a swing standpoint, I need to see something develop. I can't even call this at the moment. For me, we're range bound again. I need to see the highs go, or I need to see the lows go from right side price action to be developed. Nothing yet can be confirmed, but I'll take a look at euro dollar because it will be completely inverse to what we've just discussed. And it's a similar scenario. You know, on Monday we discussed the reaction from this supply level to get short. Now what do we see? We see the lows holding. So we're range bound. Every pair and every instrument. So every pair, the euro dollar, the majors, the indexes, they're not pairs, the indexes, the metals, they're all range bound at this moment in time. Why? Because we're waiting to see what happens with Iran. We're waiting to see what happens with the tariffs. And we're waiting for the market to show good signs of further bullish intent. Now, if that happens, what will happen? Indices will go long. Euro will go long. The US dollar will go short. Gold will go short. Treasuries will go short. It's going to be a very interesting time for us. So I don't mind sitting on my hands coming into the end of the month. You know, it's 3 days left until the end of the month. It's 2 trading days roughly. Friday's pretty much a non-starter. Let's wait and see. Again, Nvidia could be something that provides a catalyst for the market, because if Nvidia delivers, it means that there's still momentum, there's still optimism, there's still consumer confidence, and there's still overall business optimism in the economy and in the markets. So we could actually see a sentiment shift from cautious tones to let's get long risk. So, I mean, that's fairly it from me. I'll discuss Bitcoin. I would love some interaction from you guys and girls. I'd love to actually have a two-way communication, two-way conversation. You know, live streams and talking markets. Yes, we love the markets. Yes, we love financials. Yes, we love numbers. Yes, we love fundamentals. But it's boring talking for 60 minutes about things when no one engages, right? So, I can't. It's boring calling levels as well. You know, I've discussed it time and time again. We're trading around the same levels that we've called. Nothing much has happened. 62,000, 63,000 was where we called buys from. We traded off of that level. We're now trading back into that level. We've had the same reactions off of that 62, 63,000 demand level, which obviously pins down at 60,000. It's a boring market at the moment, like really boring, really boring. So don't get worried. Don't get caught up in the noise and hype of social media. People scalping a few ticks, a few pips, a few points, flashing their proverbial P&Ls. Just don't get caught up in it. Markets are boring. Markets are noisy. Trade professionally. I've been in this market such a long time. Like, it just annoys me when we get all of these influencers and social medias talking shit all of the time. Even the ones that are massive affiliates. It's just, fuck me. Grinds my gears. You know, they've never stepped into a brokerage or a back office or a floor or even agency broking. Got to think that next week's dollar data will shape those pairs. Yeah, you know, it's the end of the month. Next week is going to be a volatile week for data. It will be fairly slow. Monday, Tuesday will be good. Wednesday, we'll start to see a bit of a range-bound market through to Friday. Second week into March will be incredible. I think we'll have some significant moves, because if you think about it from a timeline perspective as well, we have week one worth of macro red folder high impact news. We also have the cease of the 15-day ultimatum on Iran. We potentially have further data on the tariffs. So I think second week of March will be best. Range bound, we have a return. Yeah, I can't even call it any more than I have, Anthony. How many times in a week and a day do I say trading between this range bound here? You've just got to stay patient. You've got to stay disciplined. And sometimes there's just not much to talk about in the markets, and that's okay. And the UK budget will put some curveballs in. I mean, it will put some big brass balls in the market, I'm sure. I mean, everyone's not happy with Labour as it is. I know Keir Starmer has now announced that he will allow general elections again, and that's going to be good for market. But I think there's going to be a huge split decision now, because we're starting to see new parties reform, Restore Britain, the Green Party. These three parties are really heating up, and all it's going to do is split the seats. So we need to find some form of JV decision where maybe Restore Britain and Reform come together. Maybe Green Party and Labour come together. Who knows? Who knows what we'll see in Parliament and government over the next few years. But unfortunately, we still have people like Rachel Reeves talking absolute codswallop about economic data that she has no clue about in terms of policies. And it's fucking unreal. Absolutely financially illiterate. But what do we do? Does anyone have any other questions? Come on, people. Tell me some charts. Show me your charts. Send in a link. Let me open up your charts. Let me open up what I would like to do. This would be wicked. I'd love to do this. What I'd like to do is, how we do it, I'll figure it out. But what I'd love to do is, I'd love for you to send in your charts. Whether it's a winning trade, a break-even trade, a losing trade, or questions about your charts. How would I manage this better? How do I know what's the best risk size? Ask, whatever there is, ask me. It doesn't necessarily mean I'm correct. I could be wrong. But I would love to break down your positions for you. So if you've got trades that you want analyzed, whether that be winning trades, losing trades, break-even trades, or general questions, queries about your charts, about your ideas, send them in. Send an email to me, kevin@seacrestmarkets.io. I'll look at them. I'll bring them into the live stream. We'll break them down in real time together. There is nothing better than discussing trade ideas and charts with you and seeing what we can do together. Pretty much it. I mean, we've got nothing more to discuss, from an economic perspective. What do we have out? We have President Trump's State Union speech today, which wasn't initially on the cards. We have USA PPI data on Friday, alongside some other European and Canadian data. Sorry, my note. Hay fever's killing me, everybody. I apologize. And it is hay fever. I'm not on anything. Oh, excuse me. Sorry. Look how many earnings are being released. Absolutely insane. That was all of Tuesday. Crazy. Diageo. I wonder how they'll do. So many Gen Z are no longer drinking, which is huge. Which is huge for the industry. I think it's like 60 or 70%. Crazy. Sterling yen. Okay, I'll have a look at that. I mean, that level failed, didn't it? We had no move back down to demand. We just broke that pattern and went to the upside from January. I mean, we could definitely look at longs back into the 2013 levels, 2013, sorry, not 2013, because we got this level here that's now been reacted to. So it came a little bit later than expected. We had that initial move to the upside. Nice. Then we flattened out. We started to push down. So we've got two scenarios here. We're still respecting that previous point of demand to the left. We have broken all of that demand internally. And it could mean that we get either a move back into the highs and, of course, continue to trade through the highs, or we actually start to look for shorts. Obviously, we're trading off of that support, which, again, you can see we've got that range support here. We're trading away from it, but we are trading into that supply up and around 211. So we stay long, but conservative long, because we're trading into supply resistance. I mean, if we come down into the M15, it may paint a little bit of a different. It's not painted a different picture at all at the moment. We're still very much bullish. I'd happily remain bullish. If we start to get something like this, then I might start looking for shorts in sterling. However, at this moment in time, I remain cautiously bullish. 211.15 is the reverse. Yeah. I'm pretty sure I just hit that with my level. But I'm not particularly keen on shorting a level when it trades into it. I look for momentum. I'd rather miss that initial move. So what I would like to see is something like this, the high go. Then I'd like to see the low go, so we get kind of a shift in the overall character. Then I'd like to see the supply / resistance hold. And then from there, I might look for shorts. That's pretty much how I would see it. And again, that does conform with moving and rolling out of risk into safe havens from a yen perspective. However, if I go back to my earlier comment of actually I'd be looking at selling off safe havens like gold, the dollar, I would then have to add the yen back into that basket, meaning I would stay long sterling. But thank you for sharing, Anthony. I appreciate it. It's nice to talk about it a little bit more. Does anyone else have any questions at all? Does that make sense, Anthony, as well? Whew. Yeah, I think it's the same as me. So I'd be looking for shorts after confirmed levels. 211 would be probably a good level, but I'd have to see price action develop to the right. I couldn't just short it on the proviso of a number. I'd have to get something a little bit more definitive. And again, the same for 212s. I would need to see how price trades into 212s for continuations around that area. I'd like to see some form of range. I don't like patterns, but just very simply for those that are listening, some form of bullish pattern, be it bullish flag, bullish pennant, buy the rumor, sell the news. Yeah, I guess so. That's how I'd look at it. I mean, I've seen your P&L, Anthony, so I don't judge the way you talk, and I don't judge the way you trade. You could be right, you could be wrong, I could be right, I could be wrong. So it's quite nice. It's quite nice to have these back and forth discussions, especially when you're looking at it from different technological macro lenses and analytical lenses in its entirety. I do think you should start looking at stocks though, Anthony, if you don't already. And if you do look at them, I'd be looking at stocks more. I reckon if I was to show you, and I was allowed to, I think you'd make more money in stocks than you would trading how you trade at the moment. If I showed you how. With the way you are, personally, and knowing some of the stuff, I'd be in stocks. Which, when you come down to London, let's meet for coffee. If anyone else wants to join us. But meet us in London for a coffee on me, and we can have a good chat. But Anthony, when I see you in London, we'll have a chat about it. If you're in London soon. When you stop being retired. An English beer. Well, that can happen, Ryan. I mean, I don't really drink, but I'll drink for socialism. I do like a beer. I'm being hounded for podcasts. Who's hounding you to go on podcasts, Anthony? Please. I reckon there's one person I know that's definitely interested in getting you on that would be in this side of the industry. Not saying that no one's interested in you. However, there's a couple of ladies that are doing podcasts at the moment, and they seem to be trying to get a lot of people on from different backgrounds. So I'd be quite interested to know who's trying to get you onto a podcast. Is Riz trying to get you on a podcast? Words of Wisdom, by any chance? As well as, I can't remember the ladies' names. The lady, there's these two women. I sent a picture of them to David the other day because they had a new guest on. Give me 1 second. All of the above. Oh, okay. David. The girls, I can't remember their names. The Rise podcast. So the Rise podcast, Words of Wisdom. I don't know anyone else other than Trend Followers by Michael Cavell and Trade, the Australian or Kiwi chap. Trend Traders. Oh my goodness. Where's the podcasts? 1 second. Podcasts. Chat with Traders. Trend Following Michael Cavell. Chat with Traders. Words of Wisdom. I'm not saying they're in the same bucket, by the way. Yes, drop me a WhatsApp. I'd be interested, just out of chat. I'm not interested like that, but I'm interested to know, just to see, because I didn't think you was in that side of the world. But publicity is publicity, Anthony. Good or bad. All right, well, listen, everybody. If you're going to be in London, whether it be for a beer or a coffee, I'd be keen to meet up with all of you and any one of you. And if you are in London anytime soon, drop me an email, kevin@seacrestmarkets.io. Happy to have a meet up with you outside of market hours and discuss markets with you or discuss anything with you. But other than that, thank you very much all for attending the live stream. It's been an absolutely exceptional turnout today across Facebook, YouTube, X, and Instagram. Very much value it. If you haven't already, please like and subscribe to the channels. Follow us on our social media channels. Turn on your notifications and keep an eye out for what we're doing on a day-to-day basis. Again, like and subscribe to the channels. We very much appreciate your support and your interaction and your engagement as we break down the markets with you in live real time. If you do have any suggestions and you want me to make this stream a little bit more exciting, or if you want to see something different, please, again, just send me a suggestion. I'm pretty open to new ideas. However you want me to do things, as long as it complies within our licensing and our regulations as a CFD broker under FSCA, I'm happy to explore it, discuss it with my compliance team, discuss it with our marketing team, and maybe bring you new, improved live streams. And again, similarly, if you love what we're doing, please just drop me a comment. Even go to our Trustpilot and leave us a review of our live streams, how our analysis, how our live streams, how our education, how our insight, our backgrounds, our experience are helping you to go and make more informed decisions and build better ideas into how to execute, how to manage risk in the markets. Again, we would love the feedback. We would also love the reviews, whatever level that may be. We're not here to bribe you at all. So go and leave a genuine Trustpilot review if you do so wish to. Other than that, as always, it's been a pleasure and an honor. So trade smart, trade safe, trade Seacrest, and I'll see you same time tomorrow.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree.